Hello, everyone. We are live here on our webinar platform. So let us start. My name is Olena Gryniuk. I'm the CE Director at SME Banking Club, and I will be your host today. And today we discuss a very important topic. We discuss practical solutions for risk management with AI. And I'm very glad and happy to be joined today by Christian Riemer, co-founder and CEO at Q-Lana, a company which helps banks and fintechs to digitalize SME lending journey. Christian, welcome.
Thank you, Olena.
Glad
to be back.
Yeah, glad as well. Before we get to our topic, let me very shortly mention organizational information. So we plan our webinar for around 40 minutes, but we will have time for all your questions. And we'll be able to stay longer if we have many of them. So please type your questions in the chats whenever you have them, even during the presentation. And we will be answering all your questions in the second part of the webinar during Q&A session. And yes, we are recording this webinar, and right after we finish, I will share with you the link to the recording and also the presentation. All right, so let's go to our topic. Today we will discuss how AI can strengthen decision making, improve efficiency, and deepen customer relationships in SME lending. We will touch or include in today's discussion the following components. Data management, of course, because this is the foundation of accurate risk analysis. We will talk about risk appetite and how to set clear risk parameters and measure risk-adjusted performance. We will talk about customer-centric approach and how usage of AI aligns lending decisions with what business customer needs. And we will bring and show practical examples of how AI supports relationship managers, enhance portfolio oversight, and improves early warning detection. So, Christian, and this line, I'm ready to pass the word to you. The floor is yours.
Thank you very much, Olena, and thank you all for joining this webinar. I'm glad to be back here and to talk about the topic, of a practical guide to artificial intelligence in SME lending with a focus on risk management. So we will talk about all the things that Olena has introduced here. Just a brief topic on Q-Lana. Who are we? As Olena mentioned, we are a company that helps banks digitalizing their lending processes with a strong focus on knowledge management. So our platform, which is highly configurable, is ready for financial institutions as well as for asset managers. It contains, as you can see on the screen, the entire lending workflow. So from the client acquisition all the way to the processing, monitoring, collection, special servicing, again, highly configurable with all the necessary tools such as, let's say, KYC checks, document management, rating, ESG rating, impact measurement, CPs, covenant management, and so on and so forth. And we have enriched over the last years the platform a little bit with visualizing exposures, with scoring, rating, RAROC calculations, and so on. This platform helps you to conduct your risk assessments, and you can see on the screen a little bit the concept of, let's say, having a sector assessment done, having a sector limits, sector ratings, and then borrower assessments, all these done in a very structured manner, as well as the entire monitoring process, because we always see that specifically in the longer term SME lending, monitoring is a very essential component and often neglected, but also the customer centricity of your business, to understand the customer, define the customer journeys. Those are all components that can be integrated into the Q-Lana platform, which can be rolled out in parts or can be rolled out in full. Knowledge management, as I said, was an important part for us from the beginning, even before ChatGPT became a thing and even before AI wave actually started. But obviously that wave makes it much easier for us. And here, again, we're not talking about replacing a sound bank judgment. We are really talking about strengthening your activities, strengthening your lending activities, strengthening your relationship with the customer for the purpose of building out a really strong SME lending business. There are a couple of components that we would like to talk about. And these components are indeed data management, because this is essential. That's the bread and butter. That's your base under which is necessary to really build up your business here. The second part is the risk appetite, because you can have the best risk analysis, the best risk assessment, the best risk identification, but if there is no appetite for that risk, this all work is pretty useless. So therefore, setting up a risk appetite upfront as a living vehicle or living instrument for you to guide yourself through the allocation of risk capital to specific businesses, specific sectors, specific target groups, that is an essential component that is actually pretty quantitative. Very often we hear that this is just a qualitative idea about the ways you like to take risks, but we can actually quantify that. Another component for really strengthening your business is when we talk about customer centricity. So you prioritize clients, their needs, you build the trust in a long-term basis, and basically go out to solve their business, their problems. And then on top of that, AI as a component that supports all the activities that you are doing. And we're trying to come up with a very pragmatic solution or very pragmatic indicators how you can integrate AI on a daily basis. It is not that AI replaces everything that you're doing, but it's really adding step by step to multiple components of your overall lending process. And if you do this well, then of course you achieve a lot of things that will make you look good. So you will have better, faster credit cycles, you will have better credit decisions, you will have deeper relationships, and you will be ready to scale your business up to much higher levels. So, first component that we talk about is indeed the data management. And here, first part is really getting aware of what kind of information you need to collect. You have many data domains that you work with. Those are, let's say, the customer and counterparty information, where you have the legal entity information, the UBOs, the group structures, the KYC information, the sector geographic information, your relationship information, so for example, your notes, qualitative information, meeting minutes, call summaries, emails, proposals, site visits, everything that makes your business unique, because all these data points are actually proprietary information that are not publicly available, that make your business unique or your lending business unique and help you strengthening your activities. Another area is the financial information that you need to collect in a separate space. Let's say historical and projected financial statements, bank statements, tax filings, ERP extracts. We get more and more to the point that banks can offer their customers tools to track key information such as inventory, invoicing, payroll, and so on, so that even if you don't have all the financial statements of your SME customer, you can derive indicators on how to conduct the lending business better. Other information about the credit process, so for example, your applications, the approvals, the committee members, the comments from the committees, the restrictions that have been set, but also the behavioral information like repayments, days past due, restructurings, waivers. And here you need to see this is coming partially from your core banking software, but you always have to understand that you interpret the core banking software correctly, because core banking is usually not made for historical information. So when you analyze your data structures, you have to see that you build on occasion data snapshots, that you can build your historic database that allows you to look at certain usage migration patterns and so on and so forth. Collateral assets, collateral information is of course important here, and this is almost a separate database on its own. Third-party information, credit bureau information, ESG self-assessments, trade data, invoice data, all these things come together, whereby on top of that, there's also a lot of information that is more sector relevant. It is important to understand the components of a value chain, understand the market prices that your customers are relying on, understand the regulations that your customers are relying on. All these components come in with the data management. Yeah? Policies and appetite, of course, as well. Next is, of course, then the minimum viable data architecture that you need to work on, so that you keep your systems clean, that you have a clear idea about where is your master data, what is your metadata, where you have an event log, you have a warehouse, you have a document knowledge management hub, so you have all the information available. You have all the information well structured so that it is not just a one-time effort that you build your data structure, but that really over time, this becomes a consistent source of information for you. The data governance, often neglected, but really important that you know who has the accountability, who are the owners, who are the stewards of the business, what kind of audit on the information is being done, what kind of data quality SLAs do you have with your businesses with regards to information that is being provided, because we have to be honest, very frequently the data comes from your own staff. So it is your staff that needs to really provide that information. Yeah. We come into a couple of other things, like and I'm maybe going a little bit faster here so to make sure that this is all clear. The master of the knowledge part, so you have to make sure that you capture what is in your heads. You have to make sure that you really understand what kind of relationships are important, that the data is findable, that you can understand what kind of relationships exist in the data. Next, of course, data quality is another item that we should make sure we have under control, because this is topics like completeness, validity, accuracy, consistency. All those things are relevant. So you see, while data has been something sometimes neglected, this is really the core, and there is a whole lot of data science behind it to make sure that your data is really, really well structured in your overall business. Yeah? You can go through this in detail, but let's say when we also come up when we talk to our customers in ways how we can help you structuring the data, and it's really coming up with some phases in which you start building out of your existing data additional databases, so that you make sure you have your data build up over time. This is not a one-time effort, it comes over time. We have set up a couple of phases how you can do that. For example, making sure that you have a data owner, that you have a business glossary, that you have the data quality assessed, that you build your underwriting packages, your early warning packages, so that you really know which data you have available. And then you can also build your pilots to extract data for AI analysis. When you do this well, you have a whole set of KPIs that you can follow. Give you some as an example. For example, the data quality score, the time to credit decision is another factor. The EVS, early warning system precision, the portfolio coverage, how much data is covered, how much of your portfolio is covered in the database, as well as the user adoption, how much are your users using that. These are KPIs that you can implement to make sure your data quality and your data completeness improves on an ongoing basis. Next, we come to the risk appetite framework. And this is also a theoretical concept here, but it can be filled with life if you have the right data. It's the responsibility of the risk manager as the second line of defense to really build a risk appetite framework, starting with a granular assessment of your risk structure, probabilities of defaults, loss given defaults, exposure to defaults, tracking them in your database, build up a rating. A rating usually starts with a very basic approach that can be much more sophisticated over time. Don't worry, most of the banks start with a heuristic rating. There is, yes, everybody throws around expressions around machine learning on how their score gets better. I can tell you from my experience here as well, most of the banks build their best ratings based on their own data and based on usage data. There's very limited data available for non-customers to come up with a good assessment, at least one that allows you to do long-term and larger exposures. With the probability of default, loss given default, exposure at default, you can, of course, as you know, calculate your expected loss. That can help you for the pricing, that can help you for the modeling of the unexpected loss, so that you can get to something like an capital requirement derived from the ratings, derived from the expected losses, and the modeling around the unexpected losses. This is not something that's usually done in the systems, but of course, AI and data science can help you in the modeling of those data points and can help you making sure that you can run much larger data sets as you could do in the past. You can do many more correlations and many more scenarios here for your business. This helps you then also to build the capital requirements, and you can use the Basel approach, even if you as a bank are not following the Basel approaches in general. But there are a couple of formulas that are well established, well recognized, and well assessed also by your investors, so that you can document that you are following really best practice standards. And with the capital requirements that you derive from those formulas, you can go in and calculate a risk-adjusted return on capital by using some standard formulas. Helps you really assessing the business profitability, and then using the risk-adjusted return on capital as well as your expected loss as an indicator, or the unexpected loss as a second component, develop your risk appetite to define exactly how much risk you can take, meaning what is your risk capacity, how much risk appetite you have, meaning how much money you like to lose, and setting up your risk limits in a structured manner against products, sectors, customers, regions, whatever you like, so that you can then align your risk profile with your risk appetite. If you have that in place as a base, and then later on feed this into your AI models for the recommendations of new business, you are well set up. Having said that, this is not something that you buy off the shelf. I think I'm repeating myself here. This is something that requires your own development, as well as companies like, for example, Q-Lana or others, to develop these items together with you, so that you have your particular model that is reflecting your business and scales up in the lines like you desire. Next to the data management and the risk management or the risk appetite, we also set the customer centricity as an important point. And here, really, there are a lot of developments that are interesting, and a lot of things that will help you doing better SME business. In the sense, the three key items that we see here, three key developments are going from selling products to selling outcomes, from engaging in transactions to engaging in relationships, and from anecdotal support of customers to really evidence that you are doing better business with your customers. No? And here you see a couple of tools that we have listed for the customer centricity, for example, as inputs. You can see them here on the screen. For example, solution pods. These are combinations of your risk managers, credit analysts, sector SME specialists, product specialists, which look at a couple of segments, for example, in agriculture sector, food processing, trading, and are thinking about what kind of solutions do your customers require, so that you can build up examples, build up use cases, build up models of business structures or financing structures that can help your customers. The second thing you do in the customer centricity is build up a jobs to be done library, meaning little things, little steps, solution toolkits that you provide to your relationship managers, how to help customers in specific situations, so that you move away from simply focusing on selling your loan products, but rather really addressing customer problems. This could come from helping them registering their business for a new support program, or helping them downloading their tax documents, or any other activity that is relevant, helping them with exports, helping them with applying for licenses, and so on and so forth. Putting this together, then you can come up and develop a risk management co-pilot that can give you advice based on your risk appetite to develop the right risk structures of your businesses. And ultimately also thinking, of course, about the service design, to think about how you can standardize as much as you can while staying in the processes, while staying individual vis-a-vis the customer. You will see we have done here a slide of a couple of ideas of what you can offer a customer as part of, say, so jobs to be done problem archetypes, say, for example, related to working capital, to lumpy capex needs, to FX exposures, to customer concentration risk, to informality and data gaps, looking at ways how you can assess them with, for example, some data analysis, with some solutions that you are providing, within your risk appetite framework. And then, of course, what kind of success metric you can also discuss with your customer so that you can, and this is another item I think that is quite essential. We as bankers have always been focused on selling loans, and usually we celebrate loans. Yeah? If you look at the press, you always see announcements about who has financed whom, who has received what kind of loan, who has received what kind of financing from whom. And this is usually filled with euphemisms and superlatives about the first transaction ever, and so on and so on, blah, blah. I'm not a friend of that. I really like the idea that, yes, you finance somebody, but the real success in financing is on the bank side if the money is paid back, and on the customer side if indeed business has been strengthened. So one of the things you should do in your business relationship also with the customer is not only celebrating that you sign a loan, you can celebrate with a customer also when the loan has been repaid and certain achievements have been done. And the risk metrics, or the success metrics that we deliver here on this slide can give you an idea about what you can really deliver to the customers. Let's go further here, just a second here. So again, how to develop customer centricity in the implementation, similar to the data management. Again, this can go in phases where you develop a couple of segments, a couple of jobs to be done, archetypes. You develop a couple of toolkits and then develop them step by step. Develop, of course, together with an AI assistant, and we come to that in a moment. Discover and diagnose one pages where you provide a client 360 review, where you give some risk appetite flags, where you can show some scripts, some discovery scripts to show which pain points you have in the business. You can co-design solutions. You can pre-approve toolkits for onboarding. You can pre-approve. You can prepare reports for your monthly reviews, and you can also, of course, prepare reports for your quarterly review with the customer to see whether you're still aligned in the right business structure. Now, with these three things, as I developed them before, with the things about the topics around data management, risk appetite, and customer centricity, we believe that you have a much better use case, a much better business model for servicing your SME customers. This will strengthen your business. This will help you also getting more comfortable with the risk of SMEs, and will get the SMEs more comfortable with the banks, so that you come to a point that there is really a trusted relationship that is being built. Again, all these things should have been actually best practice for a long time. And now we come to the point that we have artificial intelligence actually helping us with those activities and helping us getting things better. There are a lot of discussions around AI about replacing businesses, replacing stuff, getting more efficient, and so on. I think probably you all have had your own experience on dealing with some AI tools such as Gemini, such as ChatGPT or others. And you have probably seen that, yes, indeed, there are areas where AI can help you. There are areas where AI hallucinates, and there are areas where maybe there are a lot of opportunities that you haven't even discovered. One of the items that's for sure is that the development in this space is radically fast. And every month, every week, new tools are coming up, or improvements to tools are coming up. And I will show you one, which is really one tool that we are relying quite a lot when we are testing things. There is a lot out there. There's a lot out there that's also not very expensive for testing and for developing. Now, take it with the quote from Jensen Huang, the CEO of NVIDIA, who said, well, if, I think it was Jensen Huang, or was it Sam Altman? I'm not sure. One of the two actually said that basically if you are using AI only for efficiency improvements, you're missing the point, because it basically is a reflection that while you have all these tools of AI at hand, the only thing you can think about is efficiency improvement. You're not jumping far enough. You can really think about going better, going further, going deeper with additional ideas, with additional tools here. And these tools don't mean that you have to integrate them everywhere at the same time. They can really be added on at individual touch points to help you step by step, depending on the maturity of your business, depending on the maturity of your data, as well as some other concerns such as data privacy. But here are a couple of 10 use cases that we have done here um, for the use of AI in SME lending, and we split them up by actually what the use case is, what AI actually does, what the inputs are, what the effort for development are, and the ease of implementation are. So basically, document AIs for financials. So basically, extract figures from financial statements, validate them against rules, pushes against the ratios, and flag any kind of gaps. You need, of course, the audited financial statements. You need PDFs, bank statements, or if you are working in an informal sector because your businesses are not registered, as you have much more in less developed countries, then you can develop your own standards to which the customers are reporting, and you can make sure you can read them. You need an off-the-shelf OCR, and you need some mapping, and it's actually relatively straightforward to implement something like this as a starting point. Another one is a Client 360 summarizer. Gets a little bit more complicated because you'd like to develop a one-pager about all your recent interactions with the customer, the status of your loan facilities, the covenants, any kind of risk appetite flags, any kind of links to the evidence, the documents. Again, obviously, this requires that you have your data management in place, that you think about that you think about the completeness of qualitative information such as visit reports. Make sure you have your notes in there. If you use a system like Q-Lana, Q-Lana is prepared to really track this information. A regular CRM does something like this as well, has the credit memos in place. It helps you as well. Again, Q-Lana is based on that as well, to structure your loan applications, for example, into a much more separated pieces. I've seen specifically when it comes around longer term loans, larger loans, that loan officers are writing documents and documents, pages about loan applications. It can be very short, it can be very structured if you make sure that you say, okay, here's one paragraph on products, one paragraph on history, one paragraph on business development, and so on and so forth. And if you have them, that also helps you then in the extraction of this data into a Client 360 summarizer. There is a policy or risk gatekeeper as another tool that you can do, where you run basically your assessment, your product against all kinds of limits to see, does everything that you have in there comply with policies? Does this fit with any kind of minimum RAROC requirements? Now, traditionally, this was always the grumpy risk manager or the grumpy auditor who sat somewhere in the committee, and when you prepared your application, then you came in with fears that you were missing something, or that the risk manager could criticize you because you forget this or that, a factor in your application. Now, this can be much more collaborative if you have such a checkbox, such a bot that helps you with a review of all your policies and procedures. By the way, also relatively easy to implement because these policies and procedures are present. You can use them as they are. You don't have to collect further parts. If your risk management is such that your policies and procedures are there, are consistent, are developed in a coherent manner, have not just been a patchwork of policies here and there, but have been done complete, then it is really relatively straightforward to use them in a bot to help you with an assessment of this, to run any application, any business idea, any application, any restructuring against your policies to make sure that you are fully compliant. Similar with the RAROC part, this is something that we have discussed before. There is a lot of deterministic data. There are a lot of formulas, a lot of rule-based decision-making. I see there is AI necessary, but you can also do it without it if you have the right data structure in place. And then, of course, the early warning system, where I believe a lot of value comes in that has not been considered so far. This goes around the management of problem of exposure, of risky exposures. And by the way, just to make sure, when I talk about risk exposures, I'm not talking about loans that are defaulted. a loan that is 90 days or 180 days in arrears is not a risk, it's a problem. I'm talking about risky loans, as in loans that are performing today but might not perform tomorrow. And here, if you have ways how you can blend behavioral data, sector information, macro information, information from other customers, account data, watch list information, repayment information, also as well as sector information, you can develop an early warning model that really helps you monitoring your portfolio, cross-referencing information, as well as then subsequently providing to your relationship managers a set of information, for example, in the 360 review, to say these are questions that you can ask your borrowers to make sure you get a better information about the true risk of your customer. Because most frequently, traditionally, banks discovered a risk of a loan if the client didn't pay on time. Yeah, and that's actually a little bit fast, too late. You should be able to anticipate problems of clients, and most of the clients, the problems are arising over time. There are situations where the clients traditionally, yes, every month they make their installments, that goes well. Then they have to work a little bit harder for it, but they still try to make it. So there are a couple of months where they are at that verge where they try to make the loan payment, but actually there are risks, and it would be helpful to talk to them. That's what a good early warning system module with AI support can deliver to you. A couple of others. There are the risk management co-pilot, where basically you have the ability to structure your notes directly. You have your committee members regularly. You can derive your action lists from all those items, as well as a couple of others, such as I said before, have here some ideas like a covenant or waiver assistant that helps you structuring a covenant and waiver request quickly, with some ideas of what is best practice inside your institution. Next best action ideas, that's actually something that's really elaborate, where you can really go out and say what kind of ideas can you deliver to the customer, as well as a data quality coach, where you can go through your entire database to see where are deficiencies and how can you help them. Now, I think we still have some time here. Let me use, for example, the Client 360 summarizer as a way of how you are developing, how you can roll out such a tool. Idea is you'd like to develop a Client 360 summarizer, a one-pager that gives you an entire overview of what this client is doing in business currently with you, has done in the past with you, what kind of problems have been, what kind of interactions, all this information in one page. Yeah? So the idea is that you have an output, a one-page explainable brief per client, with links to the evidence, with exposure snapshots, with next best actions that are triggered by the relationship manager, who says, oh, I have a customer meeting, I'd like to go there. So please prepare that document. That's the idea that you have here. The first starting point is that you develop actually what kind of input data do you need, what kind of sources do you need, what kind of sources do you have available. Think about what we said before about data management. Put them all together, see that you can extract manually such a data to such a report, build the respective tables that you need inside the report, and then try to come up with a minimum viable version of that by simply developing the first idea on a offline, or let's say separated LLM that allows you to develop based on this data. And I will show you one that we love to use. It's the Notebook LM from Google that allows you to feed your own information in there and derive a report, basically an AI summary, an LLM summary, restricted only to the data, to the files, the folders, the data that you are providing, so that there is no hallucination by running it against any kind of broader database. There is really a very good structure just on the data that you have here. Again, I said it's the Notebook LM from Google. It's generally available for free for most of the cases, and the regular version is not super expensive as well, allows you to upload between 50 and 300 documents and derive from that a sample MVP for such a document. The output template, of course, that's something that comes next to develop what is really useful. You run that against the users, against the relationship managers, test them, ask whether this is something that is useful for them and what can be done more, what can be done better. And then you start developing the prompts. So starting with the system prompt and then all the other prompts following thereafter. I've just quoted the one that we had here for the system prompt for such a tool. You are the credit risk co-pilot, enforce the bank's policies and the risk appetite framework, never invent numbers, summarize only from retrieved documents and structured fields. Every risk flag must include a citation, and if data is missing, state non-available, list the required sources. So these are things you have to teach every LLM, otherwise they go off the rails. And that's something, and again, there are a couple of best practice things that we have applied as well, which you can also learn relatively straightforward. Yeah. Then define the workflow, define the roles in this business, make sure you have the right access limitations, the encryption and the audit trails available, and then they'll go through a quality control. So that's basically the steps how you develop any of those AI supports that I've shown to you. Let me show you before we come to an end here. Also, quickly, one item that we have done, for example, at Q-Lana, we have developed the idea of a sector limit, of a sector assessment. We've done that sector as a sector assessment where we develop for a specific country an exposure to sectors and develop together with AI input about risk factors, trends, and so on and so forth. We used that as an example because that did not require any client-specific information, and we could really develop a sector limit approval, a detailed sector analysis, a business assessment, so that you combine what does the sector offer in opportunities, what kind of risk does the sector have, and how are we as a bank positioned to develop this sector for our customers. Then you see here the workflows that we did here for this specific bot, and this was the result that was coming out. Just to give you a small snapshot of a tool that I've mentioned a couple of times. This is the Google Notebook LM, where you can upload your document, you can chat with the documents actually, you can build your mind maps, you can build an audio and video review, you can build your reports, you can even quiz yourself about this. So it's really an amazing tool to get started on the actions for AI. Now, this is pretty much a summary of what I wanted to tell you. I think we're reaching 40 minutes, so I think we are getting to the point of Q&A, and I hope it was probably relatively fast, but a lot of content. But look, you get the recording and you get the slides. You can repeat them and you can run them at a slower speed if this was too fast for you. Thank you.
Yeah, thank you very much, Christian. Indeed, it was really insightful and available. And yes, we will share the presentation so everybody could look through it once again and watch the recording. We do have some time for questions, so please type your questions in the chat or comments. We will read them and answer them right now. While we're waiting for those, Christian, I have questions to you as well. First of all, let me ask you, what is your view on the following situation that we see at least in the CE markets, and we've been discussing this for second or third year already in different our events, including conference. It's actually about risk appetite for SME loans. We do see that here in the region, banks have less appetite for SME loans than fintechs. Even if they digitalize their SME lending journeys, they still want to have, the best SME customers. They ask more documents than fintechs ask, and it's not the case that the fintechs analyze less documents. They just maybe more actively use data sources which are available and basing or making their decision based on this data. And if we say, if we take Poland as an example, then here fintechs and banks as well have access to 60 data sources on SME customers, including financial data, transactional data. So if we get back at the beginning of your presentation when we discussed data management, so that we can say that the access to data sources are the same, or even banks should have more data on SME customers. So maybe there's also a question of the data architecture. Maybe the data is silos and it's not centralized, and then it makes it difficult to put it all together and take all of it in the decision-making process. And then if we say customer centricity, and if we say that, if they could understand their SME needs more, do you think, and putting AI agents on that, do you think we could have a situation in the nearest years that banks would have more risk appetite for SME loans? What's your view on that?
Thank you, Olena. I mean, this is there's a lot in this question to unpack here. There's the fundamental difference between, let's say, a fintech that doesn't take deposits and therefore doesn't have any responsibility to, retail investors or investors who are, or let's say, savers who are protected by the regulators. A bank might have more concerns there. Banks have traditionally done a lot of collateral-based lending instead of cash flow-based lending, which, of course, if you look at fintechs, very often looking at specific niches in the financing world, being this trade finance, invoice discounting, or any kind of short-term business, the ability to do a cash flow-based assessment is, of course, much easier. If banks would limit themselves to those types of businesses, they could potentially do more, or they use this as an entry point. There are, of course, regulatory concerns as well. If you are operating in a regulatory environment where, let's say, a loan to a multinational corporation drags the same amount, same percentage of capital, like the loan to a small SME, of course, you are incentivized to do the larger loan because you can deploy much more capital faster to a company that is well managed or well structured, well documented, as opposed to an SME. There are, of course, these problems as well. If you are working in the area where you're always relying on perfect data, unfortunately, that's never available in the SME space. This is something that you have to basically make that your passion, your business model, to say, this is where we are. This is where we'd like to focus on this sector where we don't have perfect information, but can compensate through a customer-centric approach where we understand the customer per se much better. There is more data that you can use. There is more data that you can analyze. You can get towards a better rating that allows you to potentially reduce the risk allocation in these environments. But you can also think about risk sharing, for example. AI, risk sharing as an instrument that allows you to maybe originate and manage the risk, but find investors through a securitization or through a risk-sharing fund that allow you to really take that risk. AI in this space just accelerates or opens up more opportunities for you that you have to analyze, even if data is not 100% perfect, or even if, which makes, for example, reviews. Like I said, for example, a bot that allows you to check against the risk appetite framework or the policies much more convenient for you. The AI will not manage your customer's business, your customer's finances, but it will help you to get more comfortable. And on the back of that, your bank's management can get more comfortable and can actually decide, yes, SME is a strategic target to which we allocate some risk. So it's not it's like a locked thing. Something needs to move, and somewhere you need to move to unclock the rest of the chain. But yes, banks need to make a step the same way, like you saw here. All the things that you do here, it's not that Q-Lana or any other company can come in and implement that. This is a solution that needs to be developed in collaboration with the bank's management. We cannot instruct you to do that if you don't want to. But if you are open to do that, the opportunities are unlimited.
And from what to start? From what to start, Christian, with these use cases which you showed?
Yeah.
Yeah, in the
From
presentation.
what to start, you start where you look at where you have good data, you look at where you have a good sector, you look at what has been your strength, and then you start playing around. You start, I mean, you start with the first, take a notebook LM, upload customer data, test it, learn your prompting better. I mean, even if people say that prompting was a 2024 thing, is not relevant in 2025 anymore, it is still relevant. You can learn that. So you can start, you look, play around with a data set that you have, play around with a notebook LM and see how good quality comes out. I can tell you, we tested it ourselves. If you have 2 or 3 loan applications and have them well structured, the draft of the next loan application comes out reasonably well, that allows you to do much more business. So you see there are lots of great ideas, and all the things that were risks of procrastinating for your loan officer, or risks of fearful that you're wasting your time on something, they go much faster. And this opens up a lot of opportunities. So really start trying somewhere. Don't see this as a, oh my God, it's coming through the door someday and I'm losing my job. No. If you lose your job, you lose your job to somebody who knows how to use AI, not to AI. Yeah,
Yeah.
that's where you have to get started.
Okay. Okay. And here we actually have a question from Claire about that, and it was also on my mind that which new skills actually should be developed in the risk management tools right now, and which risk management we should have to effectively work with the AI tools. So what's the ideal
What's
when
the
we
good tools?
a
Yeah.
current professional? Yeah.
Yes, so I think 2 come to my mind. The obvious one is the one that I just mentioned. Try to learn prompting, but that's not that difficult. That's a couple of hours of one class that you can even, you go to a learning platform, you get a prompting class. The other thing that I think is still extremely valid is data analysis, specifically the topic of data cleaning, because ever since I started my career, now I'm German by background, so I'm known for being a little bit tedious and detail oriented. I try to clean data, and it is always an effort that is excessive. And I always wondered, why does it take me so long to get clean data? And then I realized every data is dirty. Every data needs some cleaning. But the majority of senior managers neglect that. If you have a good understanding of really how to quickly clean up data by using Excel or AI-based Excel tools, or making sure you understand how data is structured, then the rest opens up like a, how to say, like you start learning riding a bicycle or going to ski. Yeah, once you know how to balance, suddenly no hill is too high, no descent is too steep. You tried it, and you get the appetite to do more. Yeah, but you need to have these first steps of data analysis done. Then a whole range of things open up.
Yeah. All right. And the last question to you. Have you worked with systems, data, and risk development for microfinance institutions?
Yes, we have worked a lot with microfinance institutions. We have done let's say, I've worked on data structure, on data reporting for microfinance with regards to risk relationships ever since about 12, 15 years, actually. We started getting a little bit more sophisticated during the pandemic, when it came to the point of really stress testing loan portfolios. And from there onwards, it was possible to develop that further. Now, this was very much focused just on pure quantitative data. The rest requires some data collection and some information collection. But again, the most valuable person in a microfinance institution is the loan officer, who has all the experience of dealing with customers forever. Let's use that data source. Let's make him more valuable. Let's make that knowledge available, because if you socialize that within the institution, this is rich. This is really this is your key. This is your key advantage. If you are able to leverage this qualitative information that you're collecting in an MFI for the last 20 years in a specific target region, if you can leverage that well, you'll be unbeatable.
Yeah. Thank you very much, Christian, for today's session. Thank you very much, all our attendees, for being active and staying till the very end. Please contact Christian and Q-Lana team if you would like to implement such use cases, and not only in your organizations. We will send all the information right after we finish the webinar. So thank you very much and see you next time. Goodbye.
Thank you very much. Thank you.